The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a wonderful day at the headquarters of Technical Trading and Investing, TFNN.com. And we've actually got a market that's moved more than a point or two. In fact, let's send up a marching band because we actually have a movement. And that movement is down. We're down a little more than 7.5 points on the S&P cash. We actually have some decent volume today coming in at 2 billion shares right at the moment, which is much better than yesterday by, 300,000 or 300 million. So a little bit of action. We'll get to that. Of course, we always like to start off the day with a little look back to history. On this day in 1954, Ellis Island, the gateway to America, shuts its doors after processing more than 12 million immigrants legally. Wonder how that worked. Since we know that they can't come in legally. There must have been something wrong in all those years. How could everybody come in legally? 12 million people legally. I don't know. Can't do it today, though. Anyway, opened in 1892. Today, estimated 40% of all Americans can trace their roots through Ellis Island and not making their way up through the southern border illegally. Located in New York Harbor off of the New Jersey coast and named for the merchant Samuel Ellis, who owned the island in the 1770s. Of course, inspired a great song by Neil Diamond. And, what can you say? We've been traveling far without a home, but without a star. But not without a star, I guess. That's probably why I shouldn't be in singing. Probably don't read it any better than I would sing it. But an excellent song. Always. Do we? Because I think it. Every time I hear it, it rings so true to me. Anyway, we've got downgrades. Moody's warns of bankruptcy in Scranton, Pennsylvania. Fitch downgrades to the Chicago metropolitan area. So we're starting to see a few more cracks after Detroit. It's been kind of quiet since then. But all traders, especially bond traders, should probably be very aware of what's going on in the downgrades, especially in cities and bankruptcies in those cities. Still unclear how the whole Detroit thing will unwind. I suspect we're going to see the same thing in Scranton here fairly soon, and several cities in California where you just see things that don't make any sense. Supposedly they're out of money. They're buying $1 billion worth of iPads to give kids. Kids are all using them for Twitter. Are they out of money or are they not out of money? It's kind of hard to tell. Ugly. Been beat with the ugly stick. Russian GDP came out. It was just 1.2%, well below the 1.4 expected, and I suspect it's going to get even weaker. Many blame President Vladimir Putin, not Tootin, for diversifying the economy away from oil, which has seen prices stagnate and demand weaker as the world becomes more energy efficient and shifts toward cleaner alternatives, which is mostly a lot of bull. It's all about fracking and all the oil that's coming out of the earth that no one ever thought that it could get out of. The biggest problem is all the money that Russia made, pretty much all the money that came in for Russia was all of the oil wells they had that had been around forever. And at $100, $110, they made a lot of money. At 93, not so much. And we can see that if we see something like $85 a gallon, $85 a barrel oil, we'll probably see them launching missiles themselves in the Mideast to get the price up. They've been using their surrogates for more than a little while to keep disharmony going, but we've got so much oil here now that it's hard to keep that going. But just to know that we've seen Europe have an emergency rate drop. We're now seeing the numbers come out for Russia. And I suspect fairly quickly we're going to start seeing the export numbers for China also dropping. 3, 2, 1 ignition today, at least in the digital world. Everybody is at ignition. And this is where a lot of people pontificate about all the new things that are going to happen, and they get the people that are the darlings of the media to come on. For the most part, this is going to suck up a lot of the oxygen in technology. Don't think that there's a lot of useful news that's going to come out of this, but a lot of blowhards on infotainment or financial infotainment stations will probably spend a lot of time on it over the next few days. But this is where just the rich get to come and meet the other rich. Some people come and see whether or not there's actually anything these people will tell them that will enrich in their lives or enrich in their bank accounts. Neither is true. What else do we have going on? IPOs this week. We've got 13 now, probably 15 by the end of the week that they're trying to kick out the door. Some of these are from last week that didn't make it, that are still having problems. I suspect that if we get 7 out of the door this week, it will be pretty enormous. They're still trying to keep this market higher or at least flat to try to get a few more of these IPOs out before pretty much none scheduled now in December. But trying to get us all out before Thanksgiving in the season of huge paychecks for IPOs for these street names are over. But we've got a few that interest me this week out of the 13 that are listed. Chegg, CHGG, is an online textbook rental and education resource platform company. Plans to raise $158 million. My question is, why wouldn't just Amazon do this? I mean, there's absolutely nothing in here that really makes me think that you buy a book, you set the price. If you want a license for your school to use them per unit. Really, is it that tough? It seems to me that just some big company would set this up. That I know there's a lot of payoffs and rip-offs in school education. But long-term, doesn't it make sense just for Amazon to come down there and pick this up and watch these companies go to the wayside? Arizona Entertainment, we talked about this last week. Indian films, over 50 countries, of course, from the country that brought us the Kama Sutra. So we'd be surprised that Eros is their ticker symbol. But it's mostly just a bunch of people doing bad dancing and singing at the end of every movie. I think this is going to be the disco era of Indian movies, but they'll probably look back, think about this at like the mullet, like Billy Ray Cyrus. But $200 million. I don't know if this is a bad deal. It might be actually fairly good. Indians watch probably about 10 times more movies in theaters than we do, but of course it's 50 cents or $1 equivalent. It's pretty low. But even the poor people seem to go and enjoy movies in India. And, of course, a lot of Indians have moved out of India and moved all over the world and will buy these things on DVDs to watch them, along with the horrible dancing and singing at the end of every one of these movies. Maybe one day they'll bypass that. Extended Stay America. This is kind of an interesting play on real estate. The largest owner and operator of company-branded hotels in North America plans to raise $551 million by offering 28.3 million shares at a price range to $18.21. I tell you what, these extended stays hotels, especially corporations, have been very popular. And as long as they can keep a decent occupancy on it, not a bad way of earning income on retail property. Far an extent of what you could get renting it out. STAY. Be very interested to see what kind of people show up to this with REITs really sucking wind. We may go through a few of those later. But hotel, those kind of REITs, just doing horrible. Mifflin Harcourt. I want to say the one from The Office. What was it? Mifflin something or other. Leading global publisher of K-12 education content plans to raise $274 million by offering 18.3 million shares at a price range of $14 to $16 million. So that's pretty much it for the ones out of the 13 or 14 that are supposed to come out the door today. And, of course, we go into Thanksgiving the week after that. So pretty much we're at the end of the rope for these IPOs, and about half these things were dregs. I didn't even bother picking them up, but interesting nonetheless. Z in the Den was nice enough to send me this article about Mason graphite, on the Toronto Stock Exchange, Vancouver, otherwise known as the Wild Wild West, and over-the-counter, began trading today on a prestigious international segment of the marketplace under ticker symbol. Highly visible trading markets should provide Mason Graphite with greater access to U.S. capital markets. The whole idea, though, is that graphene is going to be a huge product in the future, and people are going to be using graphite mines a lot. I've brought this up several times. It's a scam. All you need is carbon. You're going to really make graphene good. You pretty much may need to make it almost perfect. Graphene in a mine isn't perfect. You could go get a lump of coal and probably do just about as well as you could with a actual graphite mine out there. So why do you really need it? The answer is not. The answer is that someone figured out or smelled out a giant scam out there, like naming your company something very close to Twitter. But basically, there's several different mechanisms for making graphene, and part of that is just diluting carbon into isopropyl alcohol and boiling it. And you can make one-layer thick sheets of graphene to your heart's content, and it doesn't take a graphene mine, just a lump of coal. So tough to think that people are out there doing ill will to your investing dollar, but just beware, these things are not what they seem to be. Thanks, Z, and we'll be back in just a few minutes. Yeah, Dunder Mifflin.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investor investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we'll get into some stocks here. Just a little reminiscing about what was going on in my life. Pretty much had lived in the same place till I was probably 27. Yeah, I moved, I think, when I was 10 years old. But ended up thinking that I had a place that was truly my home, and it was actually after I started, I don't have it. I've got it under here on a graphene scams. It's not a graphene scam, of course. It's the lyrics to I Am, I Said by Neil Diamond. And probably that song hit me years later, just when I realized that when I started traveling and going everywhere, that when I finally came home, it was not my home anymore. And just the thought of somebody leaving their home, and if you spend enough time away, when you come back, it's just, it ain't mine no more. Anyway, just a thought out there. We're going to get into a lot of stocks moving. Twitter. Barry Diller, of course, the big communications magnate, is raining on Twitter, saying that it has no business being valued at $40 billion. And, of course, we've talked about this far beyond just whether it's worth $40 billion. The whole issue is what it's worth at all. And being a Rorschach test, we brought that up, what was it, the day of or the day after that it actually came out. And certainly Twitter is that. But everybody's pretty much in agreement now that it's probably not what the price that everybody's talking about. Probably headed back into the low 30s here fairly soon. But starting to see some people actually rain on it, which is kind of interesting. Other stocks of interest, CLF, Cliffs Naturals, one of the biggest early losers out here today. And it's kind of interesting to see short squeezes in these highly short stocks. And, of course, since this thing crested, starting to come down. Not a lot of volume yet, but still high short interest. But when this thing was going through about $25, $26 on this last leg up, short interest was somewhere around 35%. It's dropped down to 27%, but it is still pretty huge for one of these companies. And of course, you have to watch a lot of these stocks with super high short interest. We went through those stocks not too long ago. WNR had a nice little bounce today. They've got a fairly decent deal, and it is going to be pretty exciting, I guess, for this company. Let me go ahead and read the headlines out here. It is buying a ownership stake in Northern Tier Energy. The symbol for that is NTI. We'll get to that in a second here. Closed the deal to acquire the general partners of Northern Tier Energy for $775 million. And let's see, Western is purchasing a stake, which includes 35 million limited partner units from the privately held Aecon Investments and TPG. So that sounds like a horrible mess for an investors, so we'll watch this. But kind of interesting to just see how many more limited partnerships can be pushed out the door here. We're seeing them pretty much every day now. And, of course, with crude continuing to fall lower and lower levels, it'll be interesting. Of course, Andy Heck follows this show, and maybe he'll get a good idea of what this is. But everybody and their dog is trying to sell some kind of limited partnership in the oil wells and oil regions right now. Probably a good sign that it's lower prices are here yet to come. Northern Tier Energy, a nice 50% bounce out of here. Not such a big move today. People probably already knew about it, and doesn't look that exciting. If you were just looking at the chart, it looks like a nice ABC down in this market. Let's see what else we have going on out here. Wanted to take a look at Zillow today. This company had been coming back down and broken through a pretty high volume low back out here at $79.99 from August 20th, 7 million shares. Broke through that. It's kind of trying to come back up through there right now, but just doesn't look like a lot of energy to push this thing back up in the trading range. A lot of these newer IPOs finding a little drag out there. Give me a call, 877-927-6648. Give me a ring.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back and look at stocks with super high short interest, we're going to try to go and pick through a few that are interesting. One that probably has piqued my interest today, especially with energy prices plummeting down, is First Solar. 14 million shares at the last high at $59. That happened on May 21st of this year. And as we broke through that, we need to see 14 million shares. On the 4th, we had 10 million shares. And since then, it's all been 5-6 million shares. And, of course, we're up today with about 6 million shares as we continue trying to break through these highs. This is kind of a interesting chart pattern in that we're seeing a lot of these companies with high short interest rates trying to run the tables a little bit, but certainly we are not seeing the kind of highs that we've seen before in these stocks, and almost all these stocks lose money. So the question is, not just on Twitter, but other stocks, where are these stocks that are only in business because of subsidies still not making money? What happens when those subsidies goes away? And I think more than a few of these stocks are a giant house of cards waiting to fall. But my opinion out here. Of course, we're seeing gold hit lows and bouncing all around. I'd like to see 1272 on gold. What do we have right now? 1283. So is that right? Make it a little bit bigger here so I can actually see it. 1263. So we've blown through that here today. I was looking at it just before the show. I think it was 1274 or something like that. This would be good. It's going to be very interesting to see how many contracts we end up on gold. But I've been saying for a while, I would love to see this thing back down to 1180 or $1,200 again. May not get there. A lot of times these washouts can be very fast. But right now the question is just how fast are we going to get there and how much energy is going to be in it. So, we look at something like AEM out here, some of these other gold stocks, just not seeing the energy out here, which is a good sign. I'd still like to see gold decimated and these gold stocks tend to hold up a little bit better. So far, the energy, not all that exciting on the way down. What do we have? RGLD. Let's take a quick look at that and see how it's working. A lot of these things just not looking that bad. Volumes, no, not that big on these. I still would like to see some of these stocks come out and test their lows. On Royal Gold, of course, that's the $38.63 low on June 26th. Not that long ago. Wouldn't be tough to see a retest on that, but it's going to probably take some kind of blowout in the gold market itself to get back down to those lows. But 1262 certainly through the 1272 level, so we're probably going to see additional weakness in that arena. Let's take a quick look at the markets again. See what we're doing. Still about the same, off about 7 points on the S&P cash, 2.13 billion shares, so not picking up a lot. We were talking about markets and even the crash back in 1929 a few days ago, and interestingly enough, going back and through a lot of these big market movements, they can hold up all the way, and then in the last 30 minutes of the day, something happens. These things really tend to roll over hard. And I'll be watching for that toward the close, especially with gold rolling off as hard as it is. And, of course, we're looking at crude off of $2.16. Certainly looks deflationary to me. And I don't know if they can throw enough money at this market from the Fed to actually get it moving. But will be interesting. Of course, we saw a nice little movement out of the euro dollar long. The EUO, excuse me, which is dollar versus euro, and of course had pretty decent support at that $80 level on the dollar index, at least this current contract. We're up about 4 cents today, but still looking fairly decent out here. We got about a 50% retracement, at least on the EUO. Let's take a quick look at that. But I've been bringing up levels where we're going to find resistance, and very good chart on EUO. If you want to go back and figure out confluence, this is an excellent place to start picking it out. In fact, let's do this. That is between $18.21 and $18.17. You just can't get a better close. And, of course, you don't want it to close above that. And, of course, you got a close of 18.14, so it went right up to where it was supposed to. It found the hard resistance. And the question is just how well we're going to move back up. Of course, when we're looking for confluence, which is agreement in two Fibonacci retracements levels, the 618 of one to the 682, or the 618 of one to the 382 of the other. And if those have a very, very tight price level like this did, 4 cents, and they come extremely over time, you could actually probably move it back down to this $20 and 7 cent high for the next fib node out here. But still a very excellent application of looking for a lot of these markets and using confluence to come back. But that probably not a better looking confluence move out here for the last few months. Again, we talked about this a lot earlier in the late summer, had a whole list of these stocks, including Apple. I think Apple got within about 50 cents or a buck. This got within, 3 cents higher and rolled over. Probably not a big deal. Now, does that mean it's over? No, just smack dab into huge amounts of resistance, and you can see some consolidation in here. Actually had a lot of energy back up off these lows, so wouldn't be surprised if the dollar has some consolidation here for a while. But I think we're probably looking at the next time we're going to see the dollar really run, you're going to see this EUO above $18.21, making its way through that, and probably make it up to 18.91, And my guess is once it does that, this thing's been building energy forever. You could probably see the EUO up to $20. So we looked at a few other stocks out here. I wanted to check up on Charter. We've been talking about this one for a while. Again, you can give me a call at 877-927-6648. Another couple of levels of confluence as we're looking for support areas on the way back down. Fairly easy one to spot is this one on Charter. You'd like to see maybe this a little bit tighter out here, but not surprising that this thing came right back in and found a fairly decent support area about this $128 level, $126 level. Got down as low as $125.68, but you'll notice this thing, almost if you took the line from Confluence at the bottom of it, came back down fairly good. But in Confluence, like this, you want to see movements over time, which in case this one started on April 30th. And the second fib node started on August 29th. These aren't 1 and 2 and 3 day patterns. When these things set up and they have very narrow trading ranges, $1.50 on a $128 stock, not bad, 1.5%. I like it even better when these things are down about 1% or 0.75%, like we saw on the previous chart. But very good. Again, give me a call, 877-927-6648. I think we've seen, how much time do we got left in this segment? Hang on just a second. Oh, we got plenty. I want to bring up one of the other things that I brought up in my newsletter over the last few days and started adding additional shorts even yesterday. I'm not 100% short, but I'd like to be by the end of this week. And as long as we continue to see movement in a lot of these markets that is overwhelmingly bearish, I'm not going to be one to be picking my shorts and covering them anytime soon unless I see a big change in the McClellan oscillator. And I'll actually pop up a chart of this right now so we can see it. But it is decidedly down. The pattern is excruciatingly very much like the August timeframe when we started pulling back. And when you look at the actual market itself, most of these moves onto the downside are at least somewhere between 45 and 60 days. So if we looked at that, we started seeing the summation index, which is a oscillator of advancers and decliners, certainly top out 10, 12 trading days. This is where you really start seeing the huge destruction in price, and that should be over the next few weeks. I suspect that we're going to have a handful of companies doing very well through Christmas and a ton of them not doing very well. We also have a lot of companies that are going to have to be paying huge amounts of increases in healthcare costs as dictated by new laws out there. And in fact, I talked to a gentleman this weekend, actually several gentlemen that run big offices down here in the Tampa area. This gentleman works in a office, has about 1,200 employees, and he was, we were sitting there in the dog park talking. He was telling me just how much it was going to cost his company for his 1,200 employees starting the first of the year with changes in healthcare regulations. And it was extremely expensive. I thought he was almost kidding me when he told me that it was going to be in excess of $100 million in cost to his company next year. And he said, if you think that's bad, that's not a big deal at all. He says that that number ends up being more like $300 million a year in 2018. He said that they were looking a great deal at moving a lot of the employees offshore if possible, that there was no way that they were going to be able to absorb that kind of price. And I suspect we're going to see a lot more companies like that seeing health care expenses increase dramatically over next year, especially in the chaos that's going to be caused by changing laws. But I don't see that there is any change perceptively in the next 45 to 60 days, where we're going to see a lot of people starting to get out of stocks and take their profits this year rather than wait and go into the teeth of Fed tightening next year, whenever it is. But I think we're seeing fairly decent indication that we've got distribution. We're in options expiration. They're trying to hold this up. I'm still thinking that we probably see a lower close by Friday of 20 or 30 S&P points. Then we're going to get into the November, December time frame for options, and those all point dramatically lower. And when I mean dramatically, 100 points lower. So we could see a decent sell-off into the first couple of weeks of December if these trends continue, and I see absolutely no evidence right now that they wouldn't continue. Normally what you see, just like we had back in August, is you'll see the movement start, and then you're going to get that one big gap down. You're going to get a second gap down, and a lot of times a third gap down. I think we're probably going to see the same thing. Bad news is going to come. We're going to see it in the indexes, and we're going to see that the summation index continues to confirm that the bulk of stocks out here continue closing lower each day when averaged out. Of course, a pretty wild indicator to watch if it hasn't been smooth. But one of the few indicators out here that I like that is a moving average out here, they've come up one that pretty much mimics, I think, human emotions as to how much pain and pleasure an individual can have. Anyway, what else do we have up here? See what else. Oh, let me get to a few other things. Just wanted to check and see that I've got my stuff updated here. See, 1765. Still not a whole lot of movement. 2.2 billion shares. So volume's pretty light right here. Be interesting. Let's go and look at what's moving in the NASDAQ. We'll get to that in just a second here. We're going to break. We'll be back. And think about those Tiger dollars. You've got just a few days left. We'll talk about more about Tiger dollars. I think you'll think about Tiger dollars during this break, and you'll decide to go to the front page of TFNN and get some Tiger dollars and make it easy 25% on your money. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And I was missing my Jaws theme there for Andy, who will be following me momentarily over most of this TFNN station. But kind of interesting. I've been waiting for a lot of these rare earth stocks to come back and test their lows out here. We're finally getting that. Pretty close with RE right now. It needs to test 160. We had a nice move out here in mid to late September. Got up to 350 on this. It's down to 162. We've got a low to test out here at 160. But when we look at a lot of these, they are coming back. But I was hoping against hope that we were going to see light volume in a lot of these stocks, and just the opposite has actually occurred. Both in RE and Molycorp, we're seeing greater volume in the last low. Molycorp, of course, added more shares to its float to raise some cash, so probably not surprising. This one's going to be just a little bit weaker out here. We wanted to see this thing get back up to that 792 and see some volume to come up, and of course the last two times volume shrank each time. Pretty good indication this thing is in a lower trading range. The question is going to be light volume today. Do we see a real move down in the broader markets? And if we do, what happens to the rest of these stocks? Might find these things ratcheting even much lower than we thought possible out here. But just a thought out here. And again, we were talking about tiger dollars. If you would like to get either of my newsletters, The Path of Least Resistance or the Tech Insider, you certainly can do that and get 25% off by getting tiger dollars today. I don't know what you'll do. Maybe flip a light switch or feel your finger on the keyboard or your mouse. And this thing, now is the time. It's the time to go to the front page of TFNN and check out those additional tiger dollars. You only have a few days left through the 17th. But we know that if you put it off, you'll forget about it, and then you'll curse the night. Instead of lighting a candle right now, end up getting some of those tiger dollars. So looking at these, looking at some of these other companies that are really starting to get hit hard to the downside today, really looks like commodities are lighting the way for a world that is at least starting to shrink for a little while in business. And it's just hard to think, maybe Andy will have some views on this, but it's hard to think when we don't see a whole lot of movement upwards in gold. We don't see a lot of movement in, let's say, rare earths or some of these other mineral companies and providers out here really sucking wind to think that we've got some kind of miraculous Christmas coming. I suspect that more than often the market is forecasting somewhere between 6 to 9 months, as it usually does. And in 6 to 9 months, we're probably going to have tapering. And so we're seeing the big distribution and probably going to see that distribution probably into the first quarter of next year until the market reprices for higher prices of, at least in the United States, healthcare for lower prices and probably a lower crack spread. Maybe we're going to see a lot of these bigger companies seeing a little bit of problem in the energy sector. They've been holding up fairly good. Crack spread's been good. They're making some money. But I think one more big leg down could be the top for a lot of these conglomerate energy companies. A lot of them looking rather weak to me anyway. But we'll have our expert on hand coming in. Oh, there he is. I see him. He's got 3 barrels and he's still down.